What's up, everyone? Welcome to the Akuma Fund. My name is Emmanuel Ardenya. Today we're talking about two main topics: why dividend investing and why so much emphasis on income.
This is a day I've been looking forward to for 2.5 years.
Yellow paint. Mantain made the black line.
Where they're moved for about 3 minutes, then grind, then they get a full point.
We dedicate this to these people out here getting brain. But the pursuit of the money is reality. Never phone them a click that you can't evaluate.
To start it off, why dividend investing? I've created a few lists of why I choose personally that this is my investment strategy. And number one is that you can start now. It's super easy to open up a brokerage account. You can do it for free. Commissions now if you're using Robinhood can be $0, or if you're if you're using Fidelity like I am, you pay $5 a trade. Super easy to do. As long as you have money, you can start dividend investing. You can buy one stock, and now you're dividend investing. So that's one of the main important things. Right now, I don't have a huge amount of income. I don't have a huge amount of cash laying around. Real estate takes a lot of cash. Other things might take a lot of cash, but you know what doesn't? Is that one stock of AT&T is $30. I can afford that. I can put $30, $35 into one AT&T stock because I want to start right now, and I think that is so important. Number two, it's easily scalable. The same reason why it's easy to start now is the same reason why it's scalable. Everything is liquid. Liquid. That AT&T stock example. I can buy one stock of AT&T for $35, or I can buy 300,000 stocks of AT&T for like $1.2 million. So it's all relative. It would be 30,000? Yeah, it'd be 30,000 AT&T shares. But it's super scalable. It doesn't really matter if you have $1, you have 100 million. The beautiful thing about the stock market is that you can easily the strategy doesn't really change that much depending on how much money you have. Number three is that dividend investing creates income. Income to me is a very important subject, and that's why I elaborate that in a bit. Number four is compounding interest. Enough said. Everyone and their mom has a video about compounding interest. I personally found out about it when, what was I doing? How did I find out about compounding interest? I think I don't even remember how I found out about compounding interest. Probably found out about it when I was like around 16 years old. And when I discovered that, once the ball gets rolling on something like that, it just starts to grow like crazy. Immediately hooked me. I'm sure a lot of people have said this before, but go check out compounding interest calculators. Use them. Check it out. As a matter of fact, I'll put a link in the description for one. And I'll put a dividend reinvestment calculator down there too, a link to one. Number five is you get favorable taxes. Not as favorable as growth investing, I think, because, well, probably about on par, because you're getting taxed long-term capital gains, which usually is about 15%. If you make less than 40 grand a year, it's not taxable. But once again, consult an accountant on that. Everything that I say is absolutely wrong. So yeah, liability. Usually, no matter what, your dividend taxes, your long-term capital gains, will always be lower than your tax bracket. Warren Buffett always likes to say, "Oh, tax the rich, oh, fucking dick." I mean, I like the dude, but come on, cut it out with like the increasing capital gains tax stuff, because you have lots of money already. You have billions of dollars, Mr. Buffett. We don't. I need to get my taxes low so I can increase my wealth. I can increase my net worth. So if it was me, I do not listen to Warren Buffett or any rich person when they start talking about increasing taxes on the rich. Because at the end of the day, who those taxes affect the most is not the people who already have all the money, who already have created a ton of money. It's the people who are attempting to create a lot of money. Those tax the rich stuff doesn't really hurt the billionaires. It hurts the millionaires, it hurts the 100,000aires. It hurts those people who are trying to actively build their wealth in the growth, expanding part of their phase. But at the end of the day, you always get favorable taxes. But don't listen to Warren Buffett on the tax stuff. Number 6 is dividend investing always has a long-term outlook. That's literally a fact. It at the very least it's going to take you. At the very least, it's going to take you a month to get your first dividend if you catch something at the X dividend date. But dividends come every 3 months. So if you're focused and dividends are your goal, at the very least, your time horizon's at least 3 months. Obviously, it's more than likely longer. Dividend investors understand the value of time because we are trying to get that compound interest. So we wait and we let the money work for us using time. Time is a very essential thing, and that's one reason why I like dividend investing is it has a long-term outlook. Number 7, the strategy allows you to maintain ownership of the asset. That is insanely important. If you're growth investing, and for you to realize the gain from the stock, from your investment in general, you have to sell it. You are losing your ownership of the asset, and that's great because you had growth and you're selling it now, hopefully at a profit. But you lose your ownership of the asset. I find that to be a huge downside of any other form of any form of investing. If it requires me to sell the asset, I start to get a little kind of iffy about it. Because if I can maintain ownership, I can maintain ownership forever. We live in a capitalistic system, where you can own things. You can own a property, you can own a business, you can own stocks, you can own a camera, you can own your shirt. Take advantage of that. Take advantage of the fact that you can own something, and you can completely have this thing. Whatever its benefit is in your self-interest. I find that to be hugely important. For example, when I have money in the stock market, as I do currently, it makes me think differently about the world. It makes me think more. I'm invested in it. I am invested in the earth. I'm invested right now in Atlantic Yield. I'm invested into renewable energy. I'm invested in these things. I care about these things because it is in my interest to care. And I think that's a huge, beautiful thing about ownership. I think the founding fathers kind of had an idea when they said that you had to be a land-owning white male. Not because of the white male part, but because of the land-owning part. Because if you own land, you're invested into seeing this thing work. For example, who takes better care of your stuff? You, or your sibling, or your daughter, or your mom? It's always going to be you. You will take care of something better than anyone else can. And that's why I think it's super important that you are able to maintain ownership over something. And then number 8, it's very easy to track performance. Performance when you're dividend investing is not the price of your portfolio. It is how much income you are receiving, which is easily trackable, very, very, very rarely is volatile, and is almost every single time that number will go up. If you're increasing your shares, that number will go up. Maybe there'll be hicks in case of recession. Sometimes companies will, cut their dividends or take out their dividends. But if you follow the right tactics, none of that should really matter, and it shouldn't impact you too greatly. So it's very easy to track your performance. So why am I putting so much emphasis on income? Okay, why? Number 1, income. When you're able to create income from your assets, I call it usable wealth. Usable wealth. What is usable wealth? Usable wealth is wealth that you can take and you can do something with. Why? Because life is not about net worth. Life is not about, how much dollar signs you have whenever you can fill in the net worth box. Life is about, experiencing new things, meeting people, loving people, relationships, creation, teaching, purpose. and for I would say most people, their purpose is not just to see the numbers increase. And if that's your thing, then that's your thing, and that's fine. For me, I want to be able to have net worth benefit my life, and that requires it to be usable. It needs to have a use. Because for example, if you have a home, okay, let's say you have a home and you don't live in it, so that's not a use for it. But it's worth $1 billion. Okay, you have $1 billion home that you don't live in, you can't sell, you can't rent. What is the purpose of it? Well, if you can't sell it, then it's not really probably an asset. But let's say you could sell it, but for some reason you don't want to. That asset is it's a store of wealth. It has nothing else. And that's my next point is that some assets store wealth and they don't grow it. Okay, so this is gold. This is home equity most of the time. Not even most of the time. It really just depends on the person. But some assets only store wealth and store value. And when something can only store value, then it's not creating anything. It's not moving. I mean, that's one of the beautiful things about our way of economics, is that money flows, money changes hands, money goes from you, goes to the corporation, goes to the paycheck, goes to food, goes to dinner date, goes to the waitress, goes to taxes, goes to the military, goes to blow up someone, goes to the soldier. The soldier then goes and buys an RV and sells the RV, and it just continues on and on and on and on. You want something that's taking part of that system. And when your money is sitting in gold, or it's sitting in a home that's not creating any value, or sitting in any type of asset that's not creating something, it's to me it's useless. And this doesn't have to just be dividends. It doesn't have to even be real estate. For example, people say this all the time, but YouTube channels. YouTube channels are what? They are income generating assets. If you have a business and you have employees, like I have one employee, half an employee, part-time worker, who works for me. They create wealth for me. I don't have to do anything for it. All of these things to me are all the same thing. It's income generated from your assets, or another term that people like to use is passive income. But I don't like to look at it as passive, because it's really not. Okay, it takes a lot of work, but it's 100% worth it. That's why I like to call it usable wealth. For example, if you have a YouTube channel, okay, and it's making you $100,000 a month, how much would you pay for that? How much would you pay for $100,000 a month? How much would you buy that for? That's the same thing as dividends. You're buying a company that then shoots income towards you. It's no different from a business that is doing the same thing. So guys, anyways, I hope you guys learned something from today. I hope you guys learned from my term, usable wealth. I hope you guys understand that why I choose dividend investing, or any type of investing that's purpose is to create income. I hope you guys learned something. Thank you very, very much for watching the video. This has been Emmanuel Ardenia, and goodbye.